SoFi has been getting rocked, currently sitting at $11.36 per share. What is going to happen with earnings? What is the short interest? What is our level of support? And where am I buying the stock? Those are all things that we are going to go over here in this video. And I think SoFi could be the steal of a lifetime. And SoFi, to be honest with you guys, reminds me a lot of Square at $18 back in 2015. I think 5 or 10 years from now, SoFi could be well over $100 and make us all filthy rich. So that's what we're going to get into here in this video. If you guys find value or simply entertainment out of this video and you like my Valentine's Day hat, give this video a like, subscribe to the channel, and let me know down below in the comment section how many shares of SoFi you currently own and what is your price target. Now, speaking of price targets, this is an article about earnings, and obviously SoFi has been getting beaten into the ground because they are not profitable, and there is no room in this marketplace to be profitable for the short term. This will ultimately go away once investors are used to pricing non-profitable companies after interest rates start to go up. This is not going to take years for SoFi to go up, but it's going to take a couple of months. So get very comfortable with that. And like I said in the intro of this video, we will go over what I am looking forward to as far as potential catalysts, when SoFi could bounce, and where the support levels are going to be. But like I said, speaking of a price target, this analyst says, even so, based on his estimation of the company's long-term prospects, Hecht assigned SoFi a buy rating along with a $20 price target. The figure implies shares will be valued 60% higher in a year's time. And if we do look at the track record right here, you guys will see, once this loads, that he has an average return of 15.1%. So he beats the market statistically every single year with a 65% success rate. That is much higher than a lot of other analysts. This is a 5-star analyst. So SoFi could very well be at $20 or higher in the next year, and this guy obviously takes his price targets very seriously, as he is a 5-star Wall Street analyst. 263 out of 379 ratings were successful in the last year. So nevertheless, a great thing to see for SoFi. Now, let's dive into some of the short interest and what to really expect on earnings. And we're first off going to start what to expect on earnings. And obviously, don't expect anything too crazy. It's definitely going to be a catalyst, in my opinion, to send us up, as SoFi is likely to be on the top line. They don't quite have a bottom line yet because they are not profitable, but it is expected SoFi will post roughly 61% revenue growth for Q4, adding up to $275 million in adjusted net revenue. Loan originations, too, will probably grow briskly. Hecht predicts 66% year-over-year growth to $3.7 billion, led by growth in personal loans, which could more than triple year-over-year, and home loans, which are expected to rise 39%, but offset by declining student loan originations, which are expected to fall 3.5%, and membership in SoFi will grow fastest of all, up 75% year over year to 3.23 million customers. Now, this is very important, and I wanted to point this out for you guys because they are seeing declining student loan originations. Now, SoFi got its start in the lending field by refinancing student loan debt. And what is currently happening and has been happening for over 2 years, federal student loan debt does not have to be repaid currently. So why in the world would you refinance your debt right now on your student loans if you don't even have to make your payment? So I think once that starts in May, once people have to start making payments again, you will see a flood to start refinancing your student loans. And when you type in refinance student loans, SoFi is one of the top platforms that come up, and I think that will drive that sector of SoFi forward in the next coming years. So I think that's something very excited to look forward to. But I think all in all, there's going to be a lot to be excited about, and I do think you're going to see a major rally off of SoFi earnings. SoFi did just also confirm their earnings for March 1st. So we do have still about 1 month, a little bit over 1 month to make your trades and put in your orders. The fair value as well is at $22 for SoFi, with the lowest price target at $16 and the highest price target at $30. It's safe to say at sub $12, SoFi is probably a very strong buy. You can also see here on Robinhood, they do have a 5-star rating. This is very, very rare to see a 5-star rating over here on Robinhood. So that's very important, and earnings are going to look very exciting since they do have the bank charter, which they will elaborate more on and just how big that will be for their business. And like we showed in the last SoFi video here on this channel, that will add, just the bank charter alone will add $300 million in additional EBITDA by 2025. So that is a great, and I do expect that to be something management really tries to push and drive home for investors of just how important that is on the earnings call for SoFi. So it's looking very good, something to be very excited about. Now, the short interest on SoFi is sitting at 16.34%, 101.02 million shares that are currently sold short. Cost to borrow numbers are extremely low, which is really just BS in my personal opinion. You can't go to a prime broker and get stock of SoFi to lend out for 1.47%. No way in hell is any prime brokerage going to let you do that for that cheap. I personally don't think so. If you guys can with your brokerage, let me know that information. Now, as far as the exchange reported short interest that we did just get for January 14th, that came out January 26th. We were sitting at 71.28 million shares that are sold short. That is a confirmed number, and 11.53% short interest of free float and 2.23 days to cover. We're currently sitting at 2.59 days to cover. And what this is telling you is that shorts, if they wanted to get out of their positions right away, or almost instantaneously, it would take 2.59 days to do so. So that is something I really like to look at as far as gauging if a stock can see a short squeeze. You need to see a higher than 1 days to cover, preferably over 2 days to cover, and we're sitting comfortably over that 2-day threshold. As far as the share utilization, you're sitting at 56.34%, so there is a decent amount of shares that can still be sold short. And I want to give you guys the scoop on why you are seeing SoFi dropping. It's nothing SoFi is doing wrong. They're actually doing everything right. It comes down to the fact, and the data provider that I use tells me this. I can't tell you guys what it is because I've agreed not to, but retail money is not buying retail stock. So there's much less buyers of SoFi, AMC, GameStop, Corsair, Tattooed Chef, all these other stocks that typically you see retail buying. So what does that mean? Short sellers can come in here, short the stock into the ground, and virtually make free money. But on the flip side of that, for every good, there's also going to, or for every bad, there's also going to be a good for us longs in SoFi. Once the market does start to rally, you will see shorts rushing to get out of those short positions that they have took advantage of as retail investors pile money back into these stocks. A weird thing happens. I guess it's not too weird, but considering people say, buy low, sell high, the exact opposite happens in the markets. People sell low and they buy high. So once the stock does pop, that's when you see people that will start to buy SoFi in large quantities yet again. And if you're somebody that is buying at the bottom, congratulations to you. You are buying a great company at a freaking awesome valuation. So that is that as far as my actual position, and then we'll look at the charts briefly. So I do have 300 shares of SoFi, my average cost of $17.64. I have a market value of almost $3,500 currently, down about $1,800 or 34.57%, 12.05% of my portfolio. So this has helped beat my portfolio into the ground. Am I worried at all? No, I honestly wouldn't have even cared all too much if the bank charter was delayed like we have seen in the past. This is really a stock, like I said in the intro of this video, I think is like buying Square at $18 in 2015. I think it's a phenomenal company for the long term, and that's really the way that you should look at your investment in SoFi. That's the way you are almost guaranteed going to make money. Nothing is guaranteed in the stock market, and I'm not a financial advisor, but I think it's safe to say if you're buying SoFi at these prices, you will eventually make a lot of money in due time. So like Warren Buffett always says, the stock market is simply a tool used to transfer wealth from the impatient to the patient. So be patient, baby. All good things come in due time. Now, as far as the chart is concerned, we did break under this level at about $14 that I was watching pretty closely with some heavier, higher volume than average. And we actually did just hit our low for the ever since we have spacked with SoFi today with a straight shot down, going down about 10% on the day. Hit that low at $11.27 per share. So how low can we reasonably go? Now, I think $10 is your reasonable low to expect. If the markets do get very, very bad, then I think SoFi could make its way down to about $8 or even $7 per share. And if SoFi goes down to $7 per share, I will sell any one of you guys a kidney and buy more shares of SoFi because I think this is easy money currently. So that is going to conclude this video. If you guys want access to all of my trades in real time, check that link out down below in the description of this video, as well as get yourself some free stock with Moomoo. So I'll see you guys later. You guys take care, and until next time, make some money.